Hello and welcome to the first episode of Sebastian's investment show. And in this video, I will talk a little about my $20,000 portfolio. Um, and in this channel, I would like to share some of my thoughts about different companies and show how I think about investing and my journey in the stock market. This is my performance, and I've gone through many different phases during my investing career. I've gone through the luck phase, when I just tried to time the tops and time the bottoms, and that didn't go very well, as you can see. Um, and I've also tried to value investing, buying stuff that is really cheap, but and hoping for a reversal, but that hasn't succeeded either. So I changed my investment thoughts and thesis a lot during my time um, as a investor, and I have learned a lot during this period, and I want to share my own journey through investing. And the platform I'm currently using is Nordnet, which is a Norwegian and northern countries. So I don't really know how to switch the language on this yet, but perhaps I'll find that out later. But what you need to think about here is the value of the portfolio. It's 214,000 kroners is equivalent to $20,000, and yeah, in this video I will talk a little about my portfolio and how it's structured, and I want to share some of my thoughts about the stocks I've picked in this portfolio. So we can start about the American account that I have. I have many different countries in this portfolio. Overall, we have Sweden and Finland and mostly America. I transitioned from northern countries to international because I believe that there is better companies out there, instead of locking myself into the northern areas. So yeah, this is my current American portfolio. I have a bunch of companies that is amazing, I believe. Um, the reason why I think these companies will outperform the index is because they have really good capital employment, and they have really good returns on this capital. They also grow revenues in double digits, which is really important for growth. I think most of them are relatively cheap price. Some of them are quite expensive, like 14, for example, with a PE of 47. And I have also some really cheap companies like Caspi, which is my biggest holding currently, and I believe that this is one of the biggest opportunities in the market currently. It's currently priced in at 13 PE, and I will also talk a little more about this company in the future, in my next couple of videos. And the reason why I strongly believe this will outperform the index. This company hasn't. I bought it around here. My 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 price when I bought it was $105, which was in February, early March, late February. So here I bought it, and currently it's up here. But I believe that this will go a lot further because I think it's really cheap, and this is why I believe that I will beat the index because not only do I invest in high quality companies, I believe that I own qualities that is superior to the market. So, for example, instead of buying stocks like Tesla, which has uh, a lot of hype and a lot of analysts covering the stock, I choose to try to try to choose stocks that have low capital intensity, that needs less capital to employ, to then get high returns on capital employed, such as companies that I've watched before is Visa, which is an amazing company, has very little capital expenses because it's not so capital intensive. And for that reason, I believe that I will beat the index because I avoid the companies that have a lot of capital expenditure, and that needs to spend a lot of money to grow more. And because the reason why I believe this will work is because I believe that companies which can redeploy money in many different ways and don't need a lot of money to do that can have a lot more a lot more adaptability to conditions in the market and see where they need to invest their money. And for that reason, they can continue to grow um, even if the market slows down. For example, you can see during let's say um, the Corona crash, you can see it's bouncing really fast after the initial dip, and the reason why they're doing is because they keep on delivering even during tough times, because everybody uses their products and they have a big moat, which I like to also see. Because if a company owns a lot of infrastructure and um, different businesses inside key areas in the market, they can use those to continue growing. And although maybe one of the business may slow down a bit, they can always redeploy the money and use it on the businesses that is growing really fast. And for that reason, I really like companies which is really which don't really need a lot of capital to grow. And I have another example of how I have did a mistake in the past. I had a company that was really capital intensive, and I bought it because I thought it was really cheap. You can see it's a P of 6, but when I bought it, I think I bought it around here, and I bought it around here a lot more, and then I sold it around here. And the reason why they keep on doing worse is because when the market slow down, and this is a paper company, so when the world don't need paper, they will stop delivering, and as a result, the stock will go down, and they will keep underperforming the analyst expectations. And yeah, so this is an example of how I did a mistake in the past, but I've grown from it, I've learned from it, and I want to share in this channel. I want to share how I've grown from doing mistakes like this to buying companies which overall I believe will beat the index. I can share some of my. Most of these are probably known names for everyone watching. We have like companies like Decker's Outdoor with the shoe brand Hoka, and Uggs, which is real popular. And you can see how this just keeps on compounding year after year. And this is what I really want to invest in, because even during tough times, I know that they will continue to sell their brands, and their brands will keep growing. Um, so unless they see some type of disruption in their brand, I will still be a stock owner of this company. Because what I've learned is that you can try to buy like the lowest priced company ever, like PayPal and other companies try to like go for that cheap company that um, that looks too good to be true. But what I've learned is that um, it's really hard to time the bottom, and if you say it's way too cheap here, it could still be a value trap, because you can see it's not grown a lot during this time. So for that reason, I want to invest in companies that keeps on growing the cash flow every year. They have perhaps double-digit revenue growth, but what I like most is ability to show development year after year after year. And the reason why I believe that this strategy will work is if I share you a quality. Here you can see a chart of how quality and growth destroys the index, and for that reason, I believe that with this strategy, I will continue to outperform the market if I continue buying good stocks that have high growth potential and have high return on capital. And I will talk a lot more about the different companies in my portfolio. And this is like an overview of my different companies. And here I have like the Swedish and Finnish companies, which I will also talk a lot more about. So I think this is enough for today. If you watched the whole video, I would like to say thank you for watching the video. I really appreciate it. And sorry for my bad language. English is not my first language, but I'll try my best. I will show my journey in the investment world, and I would like to share different thoughts about companies and how I believe that I will beat the index, and how I've developed from being a value hunter, trying to buy the lows of different companies, to instead going over to a strategy which is more focused on quality and buying stocks that keep growing their cash flow year over year and having high return on capital, which isn't and also isn't very capital intensive businesses. So I'd like to thank you everyone for watching, and I'll see you in the next video. Peace out.